What is up, everybody? Welcome back to Bitcoin and Markets. Happy Monday. This is Fundamentals Report Day, so we're going over the Fundamentals Report. It's a free weekly newsletter at bitcoinandmarkets.com. I write it every Monday, and you guys can receive that in your inbox. But to supplement that, have some good conversation, I go ahead and live stream it as well. Comment down below, questions, comments, whatever, and I will look at those. I'll try to remember halfway through, but I will definitely get them at the end. So welcome to the channel. Like, comment, subscribe. Going out on YouTube, Rumble, Twitter now, and Telegram. So you guys can check out all those channels. It should be linked down below in the description. All right, let's share the screen and get into it. So bitcoinandmarkets.com, Bitcoin Fundamentals Report number 282. And I always start off with a meme. But okay, yeah, let me say before we get started, this has sections. So we have a headline section with Bitcoin and macro, then we go into price and then mining, layer 2 or inscriptions. So there's different sections to this, and I go through and make my tangents and go from there. So, okay, starting with a meme, what if we used 100% of our brain? You start buying Bitcoin. I thought that was pretty good. Buy Bitcoin memes. And snapshot of Bitcoin. So weekly trend, we were cooling off when I started writing this morning before market open. We're right at market open. It really took off. So I probably should have updated that. But the trend still is sideways in a cooling off. So I should just leave it. Media sentiment is neutral. Network traffic is moderate to slightly below average. We'll take a look at the mempool and all of that stuff here coming up later. Mining industry is stable. Days until halving is 24. We're under 30, guys. It's almost 3 weeks away. Gosh, it just, every time the halving comes around, it's like we're waiting for it, and then the last like 50 days just fly by to the halving. Price at the time that I updated this was 70,931. We'll take a look at some charts and the live chart too, but that went up 5% since last week's issue. Market cap is almost $1.4 trillion. Satoshis per dollar, 1412, and one finny is $7.08. That's my own personal denomination that I came up with. Okay, mining sector. Previous difficulty adjustment, we haven't had. Usually every other issue of the newsletter, we have an update to the difficulty, but we didn't have that this time. So we're still, the previous one was that one at almost 6%. And it looks like it could be a negative adjustment in 2 days, but very minor. Mempool, 161. It has come down quite a bit. For a while, it was holding around 200. It's coming down to 160 now. Fees for the next block, $2.20. This is, I would say, historical average or so. Right around $2 mark is not significant at all. It is significant if you're trying to send $2 or $1 on chain, but not for the average transaction size, which I think is still in the multiple hundreds of dollars, like $800 or something, is the median. No, wait. Yeah, is the median transaction, but the mean transaction is like 10,000, I believe. It's really, really high. So low priority fee, you can save 40 cents if you don't care when it gets included in the blockchain. Like Lightning Network. So still, guys, red. This continues to go down. Last week we actually had, I think it was in capacity, we had a tiny little increase, but we lost it all and more again this week. Almost 3% lower on capacity measured in Bitcoin. Channels over 1%, fewer channels this week. Lightning Network is going the wrong direction, that is for sure. And let me go in here and check all my levels. We had some technical difficulties on my last stream, so I want to make sure that I'm still going out. Hey, 74 viewers. This is a record, guys. Thanks for joining. Ansel Linder Bitcoin Markets going through the free weekly Bitcoin fundamentals report. Comment down below, and I'll take a look at those in a little bit. All right. In case you missed it, this is some of the content that I put out this week. Writing for Bitcoin Magazine Pro. Beyond speculation, the FOMC's implications for Bitcoin. We do talk about the FOMC down below as well here on this newsletter. And we put out 2 dashboards. I had a little chat with Mark Mason, the guy who's now heading up Bitcoin Magazine Pro. And we're probably going to change the name from dashboards because it's not a true dashboard. It's not real time or anything like that. So, we're tweaking that stuff, trying to provide as much value as we can over there on BM Pro. So check out bmpro.substack.com. Community stream. I did get out my Wednesday's live stream because we had some technical difficulties with Restream and it didn't go out to YouTube and Rumble. So I had to take the audio, cut in the charts, and listen to the press conference again, put the charts in the right spot. But you guys can find that video on YouTube. And also you can find it on all the podcast apps. It went out as well. All right, let's get into the headlines. So Madex is an artist in Bitcoin, and he turns down 1 Bitcoin to turn his artwork into an NFT. You guys probably saw this, but this is a big divide in the Bitcoin social scene. Those who don't see anything wrong with NFTs on Bitcoin, that's one side, and who literally think it's evil, that's the other side. I still fall somewhere in between. I think they are good and bad. They are horrible use of block space. I'm never going to do it. Buying an NFT on Bitcoin or using an inscription or doing ordinal stuff, I'm never going to do it. I think it's a bad use of block space, but it's ultimately going to teach us a big lesson, not just about Bitcoin and the use of block space, but it's going to teach us about why NFTs are kind of silly as well. So it's a very good learning lesson for everybody. And I do agree with David Bailey in the respect that it is kind of a reversal of what we have seen traditionally. Usually we saw altcoins taking a lot of the thunder from Bitcoin through scams. Now Bitcoin is taking a lot of altcoin thunder. So that I do agree. I don't know if that's a good thing or bad thing, but it is an evolution of the market we're moving down. So this rift in Bitcoin was beautifully illustrated by this back and forth between David Bailey and Madex. So here we go. He said he sold this artwork. It's really cool stuff. I, went on his feed and looked at a lot of his different artwork, and it's all really, really cool. David Bailey responds. This is pretty innocent response, and Madex is kind of catty back to him, but he's pretended that he could turn it into a JPEG and send it to him for 1 Bitcoin. And David Bailey said, okay, he wanted to mint it. Well, okay, then this is Madex's response. We're not going to play it. He pretty much, on principle, he just said, no, I'm not going to do that. That was a joke. Ordinals and inscriptions are evil, something like that. I mean, more power to them. Everybody's going to follow their own incentives in Bitcoin. That's what I've always said. And Madex has his principles. He stood on his principles. That's probably why he has the artwork that he does and why he's as successful as he is. But David Bailey is the same way. He has his opinions. He's following his incentives, and he's, like him or not, he's very successful in the Bitcoin space. So, yeah, just interesting. I'm pointing out the divide here between the two sides in Bitcoin. Okay, next topic. Altcoin scams are picking up again. I saw this and I just couldn't believe it. So this guy apparently was going to launch this altcoin, and he took a bunch of investors' money. I think it was like a $10,000 buy-in to get like first coins or ICO or whatever. And he broke it on the before he could even launch. So I just say, guys out there buying this hot garbage, you didn't miss Bitcoin. Just stay humble and stack sats. This guy straight up scammed people out of $10,000 initial investment. You have to be in awe of pulling the rug before even launching. It is amazing. Okay, next topic. It was kind of a slow news week for Bitcoin, but we have some macro stuff here. So FOMC confusion reigns. And I link in the bullet point to the BM Pro because I wrote extensively on this. Let's see, it came out on Thursday, the day after the FOMC, but this was my conclusion from that article. What should we take away from the FOMC meeting? First, they are not giving up on fighting inflation. In their minds, they will still be sufficiently restrictive if they cut as estimated. Second, they are not concerned about inflation reaccelerating. That's important because a lot of people are. I am not. I think we could see a period of a little bit higher inflation because nothing goes in a straight line. There's always, a little bit of a random walk to get someplace. But no, we shouldn't be concerned with inflation reaccelerating. They are more concerned that the U.S. will follow other major economies into recession, which is deflationary. Lastly, the Federal Reserve has lost a lot of credibility, not only in their diagnosis of the economy, but in their very monetary theories and tools. People are starting to question this idea of a neutral rate, this idea of how the Fed is seeing things, because I've seen a ton of macro people saying, what is Powell looking at? Is he only looking at unemployment, the establishment survey? Is he only looking at this one thing? Because there's a lot of other indicators out there, a lot of other data that is causing concern. So they've lost a lot of credibility in their ability to diagnose the economy and that they even do anything at all. And if you listen to my Wednesday stream, I went through that in gross detail. The market did not buy the optimistic language that economic activity has been expanding at a solid pace. Yeah, that's just BS. Everybody knows that it's not. Several times in the press conference, I found myself thinking and saying, actually, that was a weak answer. Powell sounds unsure. And I remember on the stream, I called that out and I said, I don't remember Powell sounding this bad before. But he did. This was probably his worst press conference of his whole tenure there. The market, to a degree, relies on the Fed's psychological policy to remain calm. This meeting did little to calm anyone's fears. Those who think inflation will pick back up will interpret this as giving up on the inflation fight. Those who are already feeling a recession will think the Fed is going to act too late. Those who believe in the Fed's omnipotence will come away questioning its credibility. So all around, the Fed can't win. It didn't win with any of these audiences at all. So I think it was a very, very bad FOMC meeting. Okay, moving on to the next headline in macro: real estate exposure and end of Q1. So we are at 114 live viewers. What's up, guys? This is a record. Like the stream. I will check comments here in a little bit. I'm reading through my free weekly newsletter. and just going on tangents and see where this takes us. So this is a good bullet point to introduce new viewers to some of my thinking on these topics. Real estate exposure at end of Q1. So why the end of Q1? Well, I mean, I've been talking about it for about 6 months because I am big into seasonality. End of Q3, end of Q1. Q3 seems to be when all the big market crashes happen. September, October. Okay. There's a reason for that. There's also a reason why end of Q1 is the way it is. So, and a lot of these seasonal adjustments hide these natural ebbs and flows of the market. And so anyway, if you take your blinders off of seasonal adjustments, then hold on, my kids are playing with the damn dog and I had to yell at them. 1 second. They have one job. Keep that dog quiet while I'm streaming. Okay. But I was expecting kind of a repeat of last year's Q1. And we kind of started to see that with the New York Community Bank, but we haven't seen a big surge in banking crisis again like last year. So, but I'm watching for that. So let's read what I said here. So potential financial squeeze on the banking system, very similar to last March with Silicon Valley Bank and Signature Bank, but it has yet to come. Several banks have had issues, but nothing has spread like last year. Last year, one of the main driving forces was draining of deposits from regional banks into money market funds to get the 5% interest. If you guys remember that, people, on your apps now, you can just send your deposits from a bank right into a money market fund, right? And get the 5% because interest rates were so high. That was a big problem last year. And this year, yes, they still have high interest rates, but we have not seen that much movement of deposits. If they would move it, they moved it last year. So there's not as much of this deposit drain that's translating into banking problems. Okay. What could be the catalyst this time? Well, commercial real estate looks in big trouble here, and several regional banks have significant exposure. Much of the real estate market is simply not marked to market or is being sold right now. So yeah, there's a ton of real estate that's like underwater, but they're not realizing those losses because there's not a lot of volume out there. Okay, so I got this from Visual Capitalist and I did share it on Telegram last week. But this commercial real estate exposure of largest US banks. We see this one down here is the New York Community Bank, and it has 57% of its assets are exposed to this. We have some other big ones, like this is MT Bank, Zion's Bank. They have pretty big exposure. Huntington. And of the big guys, Wells Fargo has the most at 21% exposure. So this could take out some of these regional banks and even affect big guys like Wells Fargo. But we have yet to see the fruition of this banking crisis at the end of Q1. We're getting really close. We have 1 week left until we enter Q2. So we'll have to see how that goes. Okay, next topic for macro news. U.S. growth will catch down to the rest of the world. I've been saying for a long time, years and years, going back on Fed Watch that I did with CK on Bitcoin Magazine, that the U.S. will likely outperform the rest of the world going into the next crisis, whatever the next recession is, because a lot of capital flight will be coming into the United States. And as we have deglobalization, you have a lot of people wanting to get their money into the United States. And so the US should do well relative to other places. Also, we are less dependent on international trade. And that is probably a wow comment to a lot of people. But only 10% of our GDP comes from international trade outside of North America. The thing is, our GDP is so big, 10% is a lot. So we comparing that to China, where it's like 30, 40%, Germany, it's like 30%. So these countries that are really heavily reliant on international trade are going to fare the worst. And what have we seen? Big time problems in China. We don't even know how bad it is over there, but it's really bad. Germany, big time problems. So those are the that's the setup where I predicted that the U.S. would outgrow these other places and have a less bad recession. And what do we see from Steno Research here? He has 2024 full year GDP forecasts, and you can see the U.S. in the black line is way higher than the other developed world here, the UK, Japan, and the Euro area. But I say that we are going to catch down. So I think this is temporary. As malaise spreads, the US will catch down to the rest of the world. So we won't escape a recession, but we performed better going into it. We'll probably have a much shallower recession than other places. And there you go. Okay, so before we go on to price, let me check the comments here. Dex Invictus. If you guys are watching for the first time, put a comment in the comment section. Don't know if you're watching on YouTube or Rumble. I'm going out both places. Let me check Telegram and see if there's any comments there. No comments there. All right. Well, I'll check back towards the end and answer you guys' questions, or we can have a discussion. All right. Bitcoin price. I do have a premium newsletter that goes out, Market Protons. I did not get one out last week because the week just got away from me, and there was little price action to actually update, especially when you consider that I specifically called for a pullback that we saw almost exactly. I think I was calling for it to go down to 60, and what did it get to? Let me see. Can I tell? Can I tell on this chart? I think it got to 60, but it was totally expected and forecast on the previous premium newsletter. So there wasn't really much to update. But I will be getting one out this week. Mark my words. All right, on to price for today. We saw some crazy price action. So at 9:30 this morning, exactly, the price started taking off. We have crossed 71,000, I think, already. And it's looking like it's up from here. But it's very interesting that coincided right with market open. So that tells you pretty much it has to do with the ETF volumes, right? Okay. Price has done a great job holding flat for the last week, which we can see very well on the weekly chart. It is very reminiscent of the consolidation at the end of last year. So here's this chart. Let me make sure everything is going out okay. I'll make this bigger for Telegram. Yeah, so this, there was some wicks on these weekly candles, but it has been pretty flat for the last 3 weeks, and it's very reminiscent of back here. So we'll see if we have something similar happen. Maybe. Last week on this report, I wrote, we could make one more push pre-halving, or could we make one more push? And I said, yes. Any furtherance of this parabola, because I was pointing out the parabolic move, any furtherance of that parabola would be vertical. So that would mean we could push all the way to 100,000 relatively quickly, and people would be super freaking surprised if that happened pre-halving. I can see how that could happen. But I don't think that's likely, though. Several macro indicators like the US 10-year are signaling that some outside pressure driving Bitcoin's price up is lessening temporarily here. And what do I mean by that for people new? Again, this is a comment from last week's, or a quote from last week's issue. So the US 10-year, when it's going up, that means that there's economic activity happening. It means money is getting looser when interest rates are going higher. So that would be bad for a safe haven play of Bitcoin. If Bitcoin is acting as a safe haven, which I think is its primary role right now, going into a deflationary recession, if rates are going up, not the public interest rates like the US 10-year, then that means the economy is doing well and there's no need for a safe haven. So that is a contra indicator there. And that's what I said last week is there are several of these indicators that were saying that the pressure driving Bitcoin's price higher looked to be temporarily easing. Most likely we continue a consolidation for at least the next week, and it could stretch into the halving. And that is exactly what we saw. So that was spot on last week. Commenting on the above chart still, if we put in the same kind of move we did after the last consolidation and ETF launch, that was a 67% rise. That puts price at 115K. So again, back to this chart. If we do this same type of move after this consolidation, 67%, that would put us up to 115K. So saying that, I mean, it sounds kind of silly, but that makes it so 100,000 doesn't seem so outlandish. We really could jump 44% in 3 weeks to 100K. We could, but it's unlikely. On the daily chart, we can see the dip that bottomed last Monday. RSI has cooled enough on the daily chart to say, okay, we've cooled down enough. Now we can start going back up. However, on the weekly chart, it has not done that. And price is now breaking 69,000 as I was writing that. It would be healthy to revisit the lows before continuing higher, just so the weekly could cool off again. But here is the daily chart with this red resistance line that was acting as resistance over here. And now we have broken through it. Let's take a look at the live chart. So share this tab. And I'll go to the daily. Zoom in here a little bit. So we're over 70,000. We did hit 71. Let's see what's the high. 71,213. So we'll see where we end up for the day. If we go to the weekly, you can see this RSI is still super, super high. And I don't like that. In the pregame show, when we were on Telegram, we were looking at this and looking at what kind of company these levels of RSI on the weekly, where has it been in the past? And it's not good if you think we're going to continue higher. In the history of Bitcoin, RSI has only been this high during the major tops. And we've never turned around at 85 and gone back up to 90. So if you don't want it to be the end of the cycle, you want it to cool off first before it goes higher again. I mean, there is a first time for everything, and we could be different this time, but the odds are that it's not. So anyway, back to the report. And what does this mean? Well, it would be healthy to revisit the lows. That's what it means. So we'll see if we do that. Things are setting up for a pre-halving pump. How high we get is less clear. I have my forecasts on the premium newsletter for that. I will say that a rally right now, without letting the weekly get a little cooler, might be setting us up for either a significant post-halving pullback. So yeah, post-halving, we rally hard into halving, and then that's a major top for 6 months, all the way out to the end of the year, something like that. It would be a major top if we continued higher here. Okay, still in price. Let's talk about Mr. 100. He's back. After slowing down purchases for a while, Mr. 100 is back with a vengeance. They stacked 1,000 BTC on the 21st of March alone. And here is just a clip so you can see 21st. They just keep stacking 100s. Now, as it turns out, this address is operated by Upbit. They are a Korean exchange, and they've just recently been licensed in Singapore. I don't know if they've moved to Singapore or not, like their headquarters, but they've recently been approved. So they're doing things, making moves, Upbit. However, speculation is still swirling about who is buying. For example, MicroStrategy custodies their Bitcoin with Coinbase. So it would look like a Coinbase address, or an address that's associated with Coinbase, would be who is buying the MicroStrategy's coins. But it's not. It's MicroStrategy that's custodying it with Coinbase. So who is using Upbit for this? That's the question. Even though Arkham Intelligence says this is normal behavior for cold storage wallets. Why don't we see Mr. 100s from the other exchanges? Something is odd. In my opinion, it fits better with a large fund acquiring Bitcoin and holding it with Upbit. This does narrow down the possibilities of who it could be, in my opinion, since it is likely not an American or European buyer. It is more likely to be a buyer from East Asia or the Middle East. So, not the recent licensing in Singapore. Like I was thinking, if Upbit had moved to Singapore 2 years ago or something, then a Qatari or someone from Dubai or something, whatever, could be buying through a Singapore exchange. But they haven't been there that long. So, because this address goes back to 2022, just like 2 days before the FTX collapse, this address started stacking. So, I'm leaning towards it being someone in East Asia, maybe a Japanese company or a Japanese investor, whatever, large fund that's buying this. I mean, wouldn't that be crazy? A lot of people are talking about Qatari sovereign wealth fund buying into Bitcoin. What happens if this is like, um, you know, the Japanese pension fund? What's that called? I can't even remember the name of it now, but the state pension fund in Japan. So that would be really, really big. But anyway, so Mr. 100 is back. And that's all for headlines, guys. Or sorry, that was price section. That's all for price section. Now let's get into Bitcoin mining. And Bitcoin mining unlocks Iceland's 9.24 million food import gap. So this is a big article from Forbes. And it's very interesting to see how the 180 has occurred about Bitcoin mining. It was all negative, negative, negative. And then just about a year ago, maybe even not that long ago, 6 months ago, it completely switched. And now we have articles like this that are extremely positive. So the main story here is that Iceland has to import a lot of their fruits and probably vegetables, a lot of their food. And so they're working with Bitcoin miners to provide heat for greenhouses so that they can grow there in Iceland. So they have this $9.28 million deficit, import deficit for their food, which isn't a lot, but that is the way that it is offered in this piece is that Bitcoin is doing great work. Stand by. So if you guys are new watching here, 168 people, 170, what's up, guys? Like, comment down below. I'll get to the questions or comments at the end. If you guys are new to my content, I work from home and I have 4 kids, and they it's a wild house. And I was going to tell you guys, I didn't tell Telegram this earlier, but we got chickens, so we're going to be raising some chickens in our backyard. So if you listen to my content, you got to go with the punches on the kids. Sometimes my son might even come in here and break into the video. But okay, where were we? This is Iceland making up their gap on imports. I quoted some more from the story. Utilizing waste heat from Bitcoin mining presents an opportunity for businesses. By tapping into the excess heat generated by mining operations, businesses enhance their environmental sustainability and unlock additional revenue streams. This approach highlights the potential for Bitcoin mining to contribute positively to economic viability and caring for the environment. I mean, that is not what we would have heard 6 months ago. It's crazy how positive all these stories are. And here's another one. Let's go on to the next story. So Bitcoin halving spurs exodus of old U.S. mining computers. And this is from Bloomberg. Okay, this one isn't necessarily positive on the environmental aspect of mining and stuff, but it's positive in the fact that it is the whole, I don't even know what to call it, but the whole light that this is being set in is positive, and it's in major outlets. Forbes, Bloomberg, come on now. So let's read a little bit from this one. About 6,000 older Bitcoin mining machines in the US will soon be idled and sent to a warehouse in Colorado Springs, where they will be refreshed and resold to buyers overseas looking to profit from mining in lower cost environs. It's a natural migration, with buyers of the old machines operating in parts of the world where power is the cheapest, said Sunnyside Digital Chief Executive Officer Taras Kulik, who has resold U.S. computers to miners in countries such as Ethiopia, Tanzania, Paraguay, and Uruguay. This is accelerated by the halving, he said. There are more risks for my machines in Africa, but I have to move them there, he said. And this is another guy, Neo Wu. Cheaper electricity outside the U.S. means it will take a much shorter time to recover the overhead costs, with labor and building materials also much less expensive. So this is an interesting quote, because he says there are more risks. And I've talked about this quite a bit, especially for Ethiopia specifically, because they are kind of in a precarious geopolitical situation with their big dam that they're creating and their relationship with Egypt and things of that, and their civil war, of course. So, yeah, there's a lot of risks going over to Ethiopia, but these guys are saying that it's worth it because the electricity is so much cheaper. Okay, I say they still have a long way to go to understand Bitcoin completely, if they ever do, but these are very positive articles. And then I quoted this one. So they said, in Bitcoin mining, specialized machines are used to validate transactions on the blockchain and earn operators a fixed token reward. So that is not correct, right? Miners do not validate transactions. They order transactions. They are validated by nodes. And they don't earn a fixed token reward. I mean, they do, but they also earn fees, right? So very positive article in Bloomberg, in Forbes. These articles are getting out there, but they still have more to learn, but they are pushing out, I think, quality stuff to people in a very positive way. All right, let's move on to the next section here. Hash rate and difficulty. Difficulty did not adjust this week. It is on pace for a small decline of 0.4% in 2 days, but that is not significant at all. Hash rate is spiking a little bit here, which could potentially pull the difficulty adjustment into positive territory, but we are getting short on time to lower the average block time under 10 minutes. And you can see here, let me pull this up. This is a 7-day moving average of the hash rate, and it is hitting all-time highs, at least the moving average is here. Okay, mempool. The mempool continues to shrink very slowly. The transaction behavior we are seeing is not indicative of an unstable price spike is imminent. So what do I mean by that? Well, usually when we have big up days in the market, we see a flood of new transactions into the mempool. And what I'll use this day over here, if you can see where my cursor is. This day was March 4th, and that was a big day in the price. So let me go to the price. Daily, March 4th, where are you? Right here. This day that set this top line right here. This day was where we had a significant top. We're getting right up there towards the all-time high. We hadn't broken the all-time high yet of 69,000. That day right there corresponded to that little up in the this day over here in the mempool. So what I'm saying by the mempool going down and look, before building up to that day, look at the mempool is growing and then it has this little spike. Okay. We're not seeing the mempool growing. We're seeing it shrink actually. So that would not be indicative of a major top. So all of these different indicators or measures are giving us a glimpse at what is going on and help us forecast into the future. So yeah, I think that price analysis isn't the only thing that can help us forecast price, right? And this is telling me that there's not a big surge and not a pre-halving surge coming. That's what this mempool is telling me. But okay, on to inscriptions. So I had to change my source for this because the other one stopped updating. But this Dune.com, I'm not aware of exactly what they do, but they seem to have a lot of people that run different code there. So this is just another guy collecting inscription data that I switched over to. So I've written recently on BM Pro how to use inscriptions to measure speculative fervor in this Bitcoin rally. When we get to the stage of the cycle where YOLO traders are getting in, we should see that spill over into inscriptions like we've seen it in altcoins for years. Until this number spikes, we haven't seen the end of the cycle. This number should also move up with altcoin prices. So the number of inscriptions should go higher with altcoin prices. First chart is the total number of inscriptions per day. As you can see, they have plateaued under 100K, even with fees relatively cheap and the mempool shrinking. So let me maximize this. So this is the plateau section we're talking about. It's plateauing under 100K. Anywhere between, say, 30 and 60, 30 and 80,000 inscriptions every day. So that's what we're seeing. Far cry from over here and the very high mempool. So the mempool hit 500 megabytes in this high section over here. Okay, next one. The next one shows inscriptions by type. As you can see, they're mostly text with a few images. So this teal color is text, and then the dark color on top, I think that's black. It might be very dark blue, but that's an image inscription. And I'm not technical about this. I don't know if they have to use multiple transactions to do an image or how they exactly do that, but you can see it's not significant. It's mostly text, okay? And the last one is fees paid by inscriptions. It's been staying under about 500,000 per day for a while, which that gives us an idea about how much value people are able to scam out there. A huge spike. I mean, I think one of these spikes hit like 30 million. I think there was one day that it doesn't look like that on this chart, but previously, if I remember correctly, one day hit about 30 million. Or no, that was weekly. So that's not right. Yeah, weekly expenditure hit 30 million during this period must have been, because this is daily fees. And it looks like that one of these days got to 10 million in one day spent. So that's about how much I guess interest out there for these things, or how much of a addressable market there is. And you can see maybe they got a little bit excited at this section, and really they haven't had to pay very many fees because there's not very much market out there for these inscriptions and these ordinals and things. And so it can't pay for itself, right? Right now it's able to be sustainable paying $500,000 a day in fees. So anyway, that's interesting. And that's it for this one. Let me scroll back up here. Let me take a look at the live charts again. And we'll take a look at some macro stuff too. And sorry, Telegram, I didn't have that maximized. Okay, so this is Bitcoin. Let's take a look at stock market. S&P 500 gapped down on the day, but still within its normal marching higher. I didn't notice on Twitter today very many people saying, the stock market's going to crash. So that's what they say every time it goes down for like 2 days in a row. They're like, oh, that was the top. That was the top. This is everything bubble. Everything's going to crash. But of course, the next day it gaps higher. How about the US 10-year? We were kind of talking about that earlier. So it is green on the day, but it's still within this pattern. Let me go down to the 4-hour and just draw this line here. So it's still within under this trend line going lower. I do expect it to go lower, guys. Like I was talking about recession coming, spreading from overseas to back to the United States. And as we go into recession, the 10-year is a very good marker for that. And if it's going higher, so if you're new and you're one of the almost 200 people watching live, this is a record for me. So thanks for joining. Comment down below. If you're new to the content and you take one thing away from the macro section, at least, is that if rates are going higher, if the US 10-year is going higher, we're not going into recession. If the US 10-year is going higher, the economy is growing, it's booming. It's when the US 10-year is going lower, when yields are going lower, is we're getting closer and closer to recession. So we can watch this and almost say, like, use this as almost the sole barometer to see how we are progressing towards recession. And if you want to go back in time and look at, let's go to the weekly. This will be easier to see. So of course, this is the big COVID crash, right? This is the COVID crash. But going into COVID, we topped out on the US 10-year back here in October of 18. And it went down. So what's this telling us? What did I just say? That we're going into recession. We're getting closer and closer to recession. And then it's almost like the market saw COVID coming. The market saw a recession coming. I think, and I've talked about this in the past, but I think that the global economy was going into recession before COVID was going to hit. And then COVID was an excuse. I mean, who knows? I'm not saying one way or the other if it was planned or released on purpose or anything like that. But it was an excuse to pump money, and that helped us come out of that recession. But now we're just paying the piper later. We didn't escape. Like, you can't escape a deflationary popping of the bubble. We just pushed it off by 4 years. And now what we're about to head into is what we should have headed into in 2020. So anyway, I mean, you can go back and look at all the recessions, and I think I have this shaded. So yeah, you can see back here in the Great Financial Crisis, higher, lower, breaking significant lows into the recession. So, I mean, you could put, like, this line here, and we're breaking down below this going into recession. That's telling us we're getting closer and closer to recession. If rates are rising, it's not signaling that, right? It's signaling that we're not going into recession. So if you would have seen this right here in June of 2007, you would have all the way over here till December. So 6 months. I guess that is pretty close. But it's the signal is falling. The falling rates are the recessionary signal, not going higher. So, okay, I beat that dead horse. Let's go to the dollar and reset this chart. We're on the weekly. Let's go down to the daily. So these are some of the levels I've been watching on the dollar, and found support right here going higher. But if you remember, the main thing I've been talking about since I did call it getting stronger, when a lot of people, when we had all the stimulus for COVID, people were saying that it was going to make the dollar weaker, but I was saying it was going to get stronger. One of the only people in Bitcoin, I think, that was saying that, and it got stronger. And then I said we're going to enter a range. Now, I thought the range was, and you can go back and look at this, I set a range, and I was saying it was going to be like 115 to 105 or something like that. We did go a little bit lower, but we have been in a range of from 100 to, what's this, 107 for a long period of time here, going on 18 months. So we are still in this range. Dollar's not getting weaker. If anything, the dollar is going to get stronger, especially as we go into recession. All right. And back to Bitcoin, 70,968. All right. I'm going to take a look at the comments, questions. Okay, there you go. Dex, yep. We looked at the GFC. Thanks for joining, man. You're here every day. Welcome to the 219 live viewers. Make sure you guys subscribe, like, and comment. Looking at the comments now. Let's go to Telegram and see what anybody is saying over there. Don't see any comments from the Telegram folks. All right. So just to end up here, guys, on this most successful live stream I've ever done. So thank you for joining. Do these every Monday, put out the fundamentals report every Monday, and you guys can sign up for that free at bitcoinandmarkets.com. Share that here again. bitcoinandmarkets.com. This is my work, and then I also write for Bitcoin Magazine at bmpro.substack.com. Let me bring that up. I'm really proud of this and proud of the work that I do over here as well. So I write more in-depth stuff, like I looked at correlation with Bitcoin and MicroStrategy. This is the one from this last week, detailing out the FOMC. I think it's real high quality stuff, if I do say so myself. But yeah, I appreciate writing for them. Check that out, bmpro.substack.com and Bitcoin and Markets. That's going to do it, guys. I don't see any other comments. So thanks for hanging out, and I'll see you guys on the next one. Bye.